All right, what's up, everyone? Kind of a slow day, kind of a slow market. So, my thought process was instead of us forcing trades, instead of us having boredom trades, I think it'd be a good idea to kind of come on here and answer some questions, review the watch list, and kind of understand, where I'm coming up with these things from. So, the first thing I'm going to do is I want to review the watch list. So, I'm going to go to the watch list channel. I want to kind of show you guys how I built this watch list in the morning, right? So essentially, as you guys know, I go through the previous day's watch list and then I kind of one by one review it. So for the sake of saving time, I'm just going to go over these one by one. So ENZ, and I'm going to go as if I've only had the information from the previous day. So one second. So on ENZ, like you guys can see, it's like weird price action, it's a kind of choppy price action. And as you look every single day, the volume is just dramatically dropping. And as you guys know, we need volume to be able to trade these stocks. And for me, if the volume is drying up and the range is drying up, that's not something that I'm interested in today. So because the volume was drying up, because it didn't have much range, I said, volume is drying up, it's going to hack choppy, so really ignoring it. And today, what did it do? It did pretty much nothing, right? It did nothing today, nothing. So the big thing that we have to understand, guys, is that just because a stock is moving does not mean that we have to force a trade on it. Does not mean that there's an opportunity. Does not mean anything along those lines, right? So for me, seeing this stock, it just was like a waste of my time, right? So let's go to CRBP. CRBP, so this is the information that we had previously. So I said CRBP, strong rebound yesterday, so likely ignoring this on short side. So let's go back to the previous 2 days. So it had its first initial run, and it kind of pulled back. So now this kind of became like a low-hanging fruit to short into resistance. And I think the plan yesterday was to short around $7. So if you waited until $7, you got a pretty clean 30, 40 cents off it. But today, because it rebounded so strong and kind of held, I said likely ignoring this as well, right? So the rebound held, and what did it do today? It just kind of went straight up. So yeah, it kind of pulled back, but this move here is the move that kind of scares people. And that's kind of what I thought. I thought because it held up yesterday, that it had a chance to have a secondary move today, which it did. In hindsight, yeah, I could have shorted it when, support broke, but the volume is so low, guys. Look at it again. Volume is decreasing at a rapid rate. And when volume decreases at a rapid rate, that tells me that any pumper, any manipulator, any scammer could come in, buy up the stock, and shoot the price higher. So not only am I looking for stocks to have, volume, I also want them to have range. So ENZ had no range, no volume. This had a range, but no volume. It was ignored. Now, same thing with INM. So on INM, guys, again, the only information I had when I was making this watch list was somewhere around here. And I said, not much meat on the bone, range is too small, so ignoring. So 170 up here, 150 up here, that means to perfectly nail it, there's 20 cents of range. And for me, 20 cents of range isn't enough. I want there to be like so much range that we could get a little piece of it and make money. But on something like INM, when there's not much range, best case scenario, I'll make 5 to 10 cents. And that tells me this is an avoid as well. So the first 3 stocks on the watch list were all avoids because either they didn't have enough volume or because they didn't have enough range. And what happened on INM today? The range contracted even more. The volume contracted even more. So it was a good idea to ignore it, right? Oftentimes I see a lot of people just trading random shit because like, oh, it's moving. I gotta attack it, it's moving. But like, if you perfectly nailed the top here at 152 and perfectly nailed the bottom here at 142, you would have got a perfect 10 cents. But no one is perfect. At best, you would have gotten 5 cents. So it's not worth the risk. It's not worth the risk, okay? So when you're looking for these stocks, guys, when I'm looking for these stocks, when I'm mentioning these stocks, I want range and I want volume. I want range so that if I screw up and I don't have the perfect entry or perfect exit, I can still make money. And I want volume so that there's no pumper or no manipulator that could come in and say, hey, I'm buying this stock, it's shooting up to the moon, and then all of a sudden I'm dead, right? QSCX, I think this was the buyout of the day. Usually buyouts don't really have much range, and it's at a set price, it's a set thing, so let's just ignore. So 1, 2, 3, 4. The first stocks were ignored, and I don't know about you guys, but pretty much this to me was enough. Like ignoring these 4 enough was good for me to be able to say, all right, like it's gonna be a pretty slow day, right? And I see there's some questions coming in. I'll get to the questions after I review this watch list. So HUBC. HUBC ideally bounced towards 230, 250, 270 lines to scale in with a 285 stop. This one was a stock that kind of collapsed. So I wanted it to bounce. It didn't really bounce, it just tanked. So it is what it is. CISO, not really a fan of sub-dollar stocks, but if I was looking to short, it'd be 70, 80, 90 with a $1 stop. Again, this stock kind of topped out pre-market, right? Topped out pre-market. And I was pretty much looking for this thing to bounce towards this resistance line to short it. But instead, what it did is it kind of bounced towards the VWAP and failed. And I think I even mentioned in the main trading room today to look for a short to VWAP. Let me see if I can find that real quick. CSO, not a trade for me, but bounced to VWAP to short for those that like sub $1 stocks. That was at 9:33 a.m. And at 9:34 a.m., it hit VWAP and pretty much crashed. So although I'm not trading it myself, for people that I know that are interested in these types of plays, I post a plan there too so that you guys can nail it and, it turned out to be pretty solid if you got it. LFCR, this was the home run of the day. So LFCR. And honestly, guys, if this gets towards VWAP, I might take a small scalp like that. But LFCR, this was the data I had, right? This is pretty much the data I had. I said LFCR, maybe a pop towards 310, 320, and 330 to short. Why 310? 310 was the previous close. Why 320? 320 is right there. Why 330? 330 is right there. And why 345 to stop? Because if it breaks above that high, I give it about a 10 to 15 cent wiggle room to stop out. And lo and behold, pretty much it hit 320 exactly, right? 320 exactly. I wish it got up a little bit higher. I wish it kind of bounced, but this was pretty much perfect. The short 310, 320, 330. So 310, previous day's close, automatic resistance. 320, resistance, 322. I rounded it down to 320. I like clean numbers. So 310, 320, 330, and boom, it just pretty much collapsed. And at zombie time on the dot, you can't make this shit up, guys, at 10:30 on the dot, it rebounded. So that's kind of the watch displays of the day. I mean, out of all these trades, out of all these stocks, all we needed was one stock to work. We got LFCR to work, and we got CISO to work on that VWAP projection. That's pretty much it. If you nailed the watch list plan on this, right? If you nailed the watch list plan, that means that you first shorted at 310. You probably added at 315 because you have FOLO, right? Divide that by 2. That means you have a 312 average. If you're probably covered in the 270 range, I call it 275 range, right? That means that you made a 13% return in about 30 minutes, right? And I don't know about you guys, but that's pretty freaking good to me. And all we need is one of these a day. We just need one of these a day. And in a slow market, if we're able to find at least one of these and avoid this chop, right? This chop, like if you were the type of guy that traded ENZ, CRBP, INM, QCNX, you might have missed the easiest trade of the day here, right? We don't know which one is going to hit the watch list lines perfectly, but that's why we have the community around us to say, hey, this is nearing the line, this is nearing the watch list, I missed this, I missed that. So that's kind of how we made the watch list. So does anyone have any questions on the watches or any questions on LFCR and how I found those lines? Previous day's close, resistance, resistance. Does that make sense? All right. So now that we covered the watch list, I want to kind of open it up into a Q&A for you guys to say, what do you guys need help with? What are you guys struggling with? Do not be shy. Do not be nervous. We're not here to judge you. We're not here to make fun of you. The only way I'll judge you and make fun of you is if you literally just don't even watch the onboarding videos. If you haven't watched the accelerator course, that's pretty much the only way I'll make fun of you. So Do you use 1-minute charts to get the levels on the watches? Yeah, I primarily use 1-minute charts. LFCR closed near its high yesterday and was opening near its high. It doesn't seem dead. So what made you confident of resistance level? So what happened was this. It closed, right? It closed at, where's 16? It closed around 310. This morning, it gapped down. It gapped down, guys. It gapped down. So what that told me is that the momentum is shifting. If it gapped up and went even higher, that would be an ignore. But because it gapped down, this told me that if it bounces, the first initial bounce should fail because now that momentum isn't there anymore. It's not as hot anymore. People don't really care about it anymore. So if it gapped up, that would have been a little bit of an avoid for me. But because it gapped down, this is signaling that there might be potential trend reversal. And that's exactly what we got. Well, to take your profits is always based on the chart. So what I would do here is I would just draw my lines. I would say, all right, previous resistance should act as support. There's some pre-market support here. So what I would have done, honestly, is our previous resistance is going to act as support. So if I nail this first initial trade, I would maybe cover some here into support. I would cover some here into support. And look at that. It bounced directly off support at 1030. So always draw your lines. Always draw your line. Always look to cover the support and always look to short at resistance. How do you manage your time in the beginning between work and studying and trading as well? Well, here's the thing, guys. When you first start trading, your most important thing is learning these strategies, okay? The hardest part in day trading is finding a strategy that works, okay? So it took me and Bao almost a decade and millions of dollars in losses to create strategies like the first red day, to create strategy like Deathline, to create strategy like the first bounce. So the hardest part is finding a strategy that works because oftentimes what people do is they make money, and then when they lose money, they think that they should be adjusting the strategy. They don't realize that trading is a game of probability and the strategy at most has like a 90% win rate. So if you have a 90% win rate strategy and you lose on that, does that mean that the strategy is flawed? Or does that mean that it's just that 10% of the time the strategy doesn't work? So the biggest problem is people change up the strategy. They try to change up the strategy when they have a losing day. But the reality is that there's just a game of probability. So that's number one, is finding a strategy that works, which is what we have. So your job is to be able to watch the videos, watch the content, watch the education, to be able to understand that strategy. Once you understand that strategy, what you have to do next is trade it. You have to come in front of the screen. You got to come here and you got to try to trade the strategy. Because there's no matter how much you watch videos, no matter how much you learn, no matter how much you whatever, unless you implement the strategy, you will never learn. Okay, you will never learn. So my advice would be to watch the videos. Let's say you're watching a video on the first bounce. What you should be doing is you should then come and trade the first bounce. It could be paper trading, it could be with 10 shares max size, but going and implementing the strategy. It's like if you learn how to shoot free throws from a YouTube video, eventually you're going to have to go and shoot them yourself to understand it even more, and then you pick up the little nuances. But the most important thing, if I'm just dead serious, is screen time. The more you show up, the more you pick up on little details. Even after 9 years of trading, I am still picking up little details along the way, right? And that's just the thing about trading, is you are always going to be learning. So how do you manage everything? To be honest, what you got to do is first spend the nights watching the videos, and then in the mornings, implement those lessons via paper trading or via small share trading, just to get your feet wet in the market. And understand that it's not going to happen overnight where you're going to master the first red day, right? It took James to miss 2, 3, 4 first red days until he nailed it. Just like Bed Bath & Beyond last month, when I made a bunch of money trading the first red day, everyone was like, oh my God, I got to learn the first red day. But if you learn the first red day before that day happened, Then when the chips were in your favor, when the stars are aligned, when the moon shaman came in, you would have been ready to nail it. So it's a combination of studying the craft, implementing the craft, and having enough screen time to get the confidence to trust the craft. Does that make sense? Given your experience in stocks and the inevitable opportunity cost on trading on slow days, why don't you move to large caps? Well, I can. The thing is, guys, I like, as your mentor, as your leader, I only want to trade things that I want you guys to repeat. Okay. So a good show of a leader is they only do things that they would want their students to follow, to learn from, to understand. So if on every slow day, even though I can make money on trading large cap stocks, you guys probably can't because you don't have the experience, you don't have the screen time yet. So it is more advantageous, it is more in your favor to just take it slow on those slow market days, because you guys are going to bleed out your accounts trading large cap stocks because you don't know what the hell you're doing. So as a leader on slow days, I want you to understand that your best bet is just not take a trade, because your dumb asses, no offense, are going to trade the wrong stocks. You're going to get emotional because large cap stocks do not move the same way as small cap stocks. And Noah could drive in Jersey. Okay, so this is a complex question here. So one shot, one kill is very, very tough, okay? One shot, one kill is really, really tough. Even me as a 9-year veteran trader, I'm very bad at one shot, one kill. I'm just not good at it. I just think it's really difficult, so I'm not going to kind of comment on that. But in terms of the watch list range, so here's the thing. What I found out about my trading personally is that my first entry is always wrong. My first entry is always deep-rooted in FOMO. I have so much FOMO on my first entry at every single point. So my first entry, I have now adapted it to be a small size. So for example, let's say I'm going to scale 300 shares. What I would do, because what normal people do is they do 100 shares, 100 shares, 100 shares. But what I do, because of my FOMO, is the first entry is going to be 50 shares. The second entry is going to be 150 shares because that second entry is usually right. So what I like to do is I like to have the first order be a lot smaller than usual to be able to combat the FOMO, to be able to understand that, hey, my first entry is always wrong. So let me use smaller size of my first entry. How do you resist the urge to cover when you see green candles as the price moves down in your targets? Well, what you have to do is you always have to cover a little bit, right? So let's say the stock goes in your favor 10 cents. Take like 25% off there. That way you have a padding. That way you have a cushion. That way you have a little bit of money locked in to allow you to be patient. Oftentimes, if you're getting the urge to cover, it's because you're panicking, right? You're like, fuck, I don't want to turn this winner into a loser. I've turned so many winners into losers. Like, I just want to lock some in, but then I can't be patient. What you got to do is take a little bit off the table, ease the nerves, and then it allows you to be a little bit more patient. That doesn't mean hold because the company is going to go bankrupt. It doesn't mean hold because it's going to go to zero. But by taking a little bit off the table, you lock in some profits, you cool your emotions, and that allows you to be a little bit more patient on those setups. My question is about exponential sizing. Who is it suitable for my A+? Who is it suitable for? My A+ setup appears quite often, usually 1 to 3 times per week. It doesn't have that big win rate, maybe 70 to 75% for good risk reward. Each time I try to size up exponentially, I often take big losses from losing streaks that mess up my P&L from other winners, which are smaller size, do not confidence. So would you say it's better to use consistent size risk if a win rate it is rather than So it's a little bit complex, right? It's a little bit complex because if your A+ setup is showing up 1 to 3 times per week, I mean, that seems a little bit hard because an A+ setup should have way more than a 70 to 75% win rate. An A+ setup should be like a 90% win rate. So I would say, break your sizing up into tiers, okay? So I'm just giving you rough examples just so you understand. So if a stock has a win rate of 50%, maybe use 1,000 shares. If a stock has a win rate of about 75%, you could use maybe 3,000 shares. But if a stock has a win rate of over 90%, then use 10,000 shares. Now, I'm not saying this is universal, but you could kind of break that down. Let's say you're using 100 shares, change it to 300 shares, change it to 1,000 shares. So you should be betting based on, honestly, that win rate of that setup. Because if the win rate is low, then you should be using low size. If the win rate is high, you should be bulldozing it. So I would challenge you to change your sizing based on those 70 to 75% win rate setups and raise the sizing for those 90% win rate setups. Yes, they're not going to happen every single day, but at least your winners are going to be larger than your losers when it does. See you later. Okay. LFCR 30% size. Yes, correct. So what I always tell people is you should always add when you see some sort of confirmation. To me, if you nailed the watch list lines at 310 and 320, then this death candle is your confirmation. This failed bounce is your add zone. So death candle signal, failed bounce add. Always look for a signal. What is the signal? Look for the signal. If you see the signal, that is your place to add. You have partial size, and then if you see the signal, you could then add on this signal. And for me, full size is relative, right? So for me, I'm only using full size on first red day setups. So I would say full size for this would be about 50% size, right? 50% size is what I would technically consider full size for something like this, because I want to reserve my 100% full size for those first red day setups. LFCR supports 270 to profit target, but let's say it only goes to 280 before bouncing. How long does it take for you to before it decides it's a good idea to move on? So what I would say is, if it's only getting to 280, take a little bit off the table to lock in some profits, and then I would just set a stop. I would either set a stop at break even, I would set a stop at a VWAP reclaim, and either it stops me out for even or reclaim, or I get to be a little bit more patient for the next move lower. The problem is that sometimes you guys don't take any of your position off. You go for the home run, and then you get stopped out. You got to lock in at least a little bit of profits. CRBP wasn't ignored because it closed strong yesterday. Well, here's the difference. CRBP was gapping up today. LFCR was gapping down today. So because CRBP gapped up, I thought that it might have more continuation. Whereas LFCR gapped out, and I thought it might not have continuation. Once you take off that 10 cents or 25%, do you have to put a stop at break even then at that point? Then are you out of the trade and have to re-enter? I mean, if you guys nail a trade, you guys should always set a stop at break even, because worst case scenario, you're going to break even. What ends up happening is, let's say your average is like $5 and it goes to like $4.90. You're like, all right, like fuck, like I don't know. And then it goes to $5. You're like, all right, like if it goes back down to $4.90, I'll cover. And then it goes to the $5.10. You're like, God damn it, what the hell did I just do? So it's always better to stop out for break even, because that's break even. Worst case scenario, you just get back in. And you wrote that LFCR was weak and wanted to not chase weakness. Yeah, because what ends up happening, guys, is you guys see this candle and you guys short the dip here instead of trying to short the bounce, right? You short the dip instead of trying to short the bounce. So my thing is just never short weakness. Always wait for the bounce. And for something like this, that it broke down, had its death candle and under VWAP, I would use 30% size if you miss this. I'll use 30% size on the rebound with a stop over the reclaim of red to green. Why 30%? Because it hit the lines, it failed, death candle. Does that make sense, guys? And these are great questions. These are great questions. So CRBP was way too thin today, but I was saying the other day that float was to figure out how thin or heavy a stock. Can you explain what thin is? Thin just means like it could go up or down very fast. Like AMBI is very thin. It goes from 13 to 15 to 15 to 13 to 16 to 12. Like it's extremely thin. Like it's moving way too crazy. 15, 60 to 13. That's 2 minutes. It's down $2 a share. Thin is dangerous. Thin is dangerous. Thin usually means that it can move up or down in an extreme way. So if I see a stock that's thin, it's a little bit dangerous because it's chop. It'll chop up, chop down, chop up, chop down. Yeah, on a low-hanging fruit, your stop should be higher than. And remember, full size is relative. For me, on a low-hanging fruit, I would use 50% max size and save 100% max size for that first red day. When you say bounce, you mean back to a level or just any bounce? Well, it should bounce back to a level, right? So for example, what's the stock? LFCR. If this is the only data we have, right? If this is the only data we have, this tells me death candle. What I see here on this death candle is I want short of bounce. Obviously, there's some VWAP bounce here. There's a red to green bounce here. So I'm looking for key levels, right? Key levels, whether it be VWAP, whether it be red to green, just something important, right? And yeah, it's sometimes it doesn't get too high. Sometimes it kind of just fails. But if you see this death candle signal, chances are it's probably going to continue lower. How many support lines before you first enter your use? I just draw them, guys. There's not, like, yeah, like, look, I can draw support lines till I turn blue. I could draw support lines, draw support lines, draw support lines, support here, support here, support here. Doesn't mean I'm going to hold all the way. It just means I'm going to slowly lock in profits here. I'm going to slowly lock in profits here. And when 1030 comes along, I'm getting the fuck out of here, bro. So yeah, there's support until infinity. But you're not going to wait until infinity. You're just going to slowly take it off piece by piece. It's not, I'm going to take it off at 3 supports. I'm going to take it off at 4 supports. Just take it off piece by piece and get the fuck out of zombie time. Wow. You purchase all your Lokis to wait for things to happen. Okay, so I'm going to show you this. Tom has a really good video on locates here, but I'm just going to kind of explain it. So if you're trading low-hanging fruit stocks, so before I start that, locates are based on supply and demand. If there is high demand for locates on a certain stock, it's going to be a lot harder for you to get those locates. So let's think about it logically. Day one stocks have the most demand, and that's why those locates are the most in limited supply and most in high prices. Day two stocks that were forgotten, stocks that people don't care about. Low-hanging fruit, they're not in high demand. So locates are readily available. So if you're trading day two stocks exclusively, you're going to have access to locates all day long at reasonable prices and everything's gonna be okay. So if trading low-hanging fruits, I would say locate only a starter when it gets to that line. So something like LFCR, I would have not located it until it started to hit the lines. And yes, you got to be fast to locate it. You got to know what you're doing. You got to be able to hit the locate button, this and that. But for low-hanging fruit, locates are going to be available all day long. So you don't have to rush to locate it. You don't have to rush to do anything. When it hits the line, locate a starter and locate more as you go along. Oftentimes, what I see people doing is they'll locate 500 shares and they end up using 50 shares and like, God damn, I just wasted all my money on locates. So for the low-hanging fruit, only locate it when it gets to that line. That way you don't waste money and locates are readily available. If you're trading day one stocks, which a lot of new members should not be doing, then those locates are harder. Those locates are more in demand. So for example, I would locate a starter of the day one stock and only get more if I need it. Whereas for a low-hanging fruit, I would wait until it got to the line. Is it cheaper to locate early? Yes, it's cheaper to locate early for the day one stocks, but for the day two low-hanging fruit, it's cheap all day long. So if trading low-hanging fruit stocks, locate only after it's nearing your lines and you're getting ready to place that trade. You don't have to locate ahead of time because locates are readily available. For day one stocks, locate a starter, but not on everything. A lot of you guys shouldn't be trading day one stocks anyway, man. So how much significance should you be placed on the red to green line? Red to green line is very, very important. Very important, because if it stays under the red to green line, that means that profit taking, it's red. It's probably going to continue to be red. If it stays over the red to green line, the longs are in control. It's probably going to continue to go higher. So you could use the red to green line as like a sentiment. If it's under, it has a chance of profit taking. If it's over, there's a chance of dip buyers coming in. Would you say a death candle is a death candle when the volume of the candle is above all other trends? I mean, yes, sometimes the volume is extreme, but like, you can just eyeball it, man. You can just eyeball it. This is a death candle to me. I just eyeball it. This is not a death candle because it's not extreme enough. This is, you gotta, to me, honestly, I just eyeball it, and that might be the wrong way to do it, but I just eyeball it. Because what people see is, oh, death candle. No, bitch, this is a death candle. The volume is elevated. It's elevated. It's not elevated volume. It doesn't have to be the craziest volume candle. Ideally, it should. But that's not the end all, be all, say all, you know? Give me a sec, guys. Did you suffer from self-doubt when you first start trading? Self-doubt occurs from lack of confidence. It occurs from not trusting your plans and not trusting your process. So the best way to conquer self-doubt is to always have a plan, entry, an exit, and a target. So what I did when I first started, guys, is you guys can see my screen, right? I mean, you guys can see me, right? Like me, like my face and shit. So what I used to do is I had post-it notes. So I'll write my plan on a post-it note. I'll write this. LFCR entry 310, 320, 330, stop 345, target 290, 270. So what I used to do is every single day, I'll write my plans on these post-it notes, and I'll post-it note it right on my screen, right at that chart. So all I had to do is look at the chart, look at my post-it note and say, all right, my entry was supposed to be 310, my exit was supposed to be this, my stop was supposed to be that. By having the post-it note written down and attached to my screen where that exact chart is, that took the lack of confidence and the lack of self-doubt out of my system. Because I made this plan with a sober mind. I was prepared on this plan, And all I'm doing is just executing that plan. So I highly suggest that all you guys get Post-it notes, Post-it note your goddamn plan onto it, and just follow the plan. The plan includes the entry, the exit, the stop. That's it. So as you guys know, the Post-it notes are now behind my screen because I got used to it. But there's been plenty of times where I still whip these things out. If there's like a very important trade or a very big deal or a very big something, I whip these out because it helps me stay calm. I just follow the plan. Yep, plenty available. Which setups do you use more of a fudge factor? I would use more of a fudge factor on like day 2 stocks or like day 3 stocks or first red day stocks. Which setup do you use a tighter stop? Day 1. Day 1 stocks are always riskier, so tighter stop. Again, the first relief cover is support. So let's say it hit 330. I would ideally look to cover some maybe around that red to green support because previous resistance should act as support. Yeah, level 2 helps because, for example, let's say my plan is to short at like 310 and I see a wall of sellers at 310. That confirms the thesis. E-man. Oops. Okay, guys, so not a good first red day. Why is it not a good first red day? It's only up 100%. We want first red days to be up so goddamn extended, that it's so obvious. This is not extended. This is not extended. Like, what's a good example of a previous first red day? Is it IGC maybe? I don't know, I gotta check. You see the difference, guys? 3 to 15. First red day. 1 to 10. First red day. It needs to be so goddamn extended, guys. So goddamn extended. It has to be so fucking extended, man. 1 to 10 is an extension. Okay? What's like another one? Was it OCGN maybe? I don't remember. So many first red days. Even Bed Bath. I think BMC was one back in the day. Like even here, 13 to fucking 40. First red day. You want it to be so extended. You want it to be so crazily extended. It's not a linear. It has to be up 126% in 3 trading days. It has to be up 89.2% in the last 26 hours. It has to just be so fucking extended it's obvious to a monkey. Okay? That's just the best way to do it. And to me, Iman is not extended enough. If this went from $1 to fucking $8 to $7, a different story. Yeah, DWAC is just a fucking, this whole is crazy. But do you see what I'm saying? That it has to be so goddamn extended. So extended. What about, what was the one that I made a shitload of money on? The oil stock, INDO. Look at how extended, guys. 22 to 86. First red day. 22 to 86. First red day. Was Torre one too? You tell me, bro. 20 to 300. 20 to 300. First red day. I want it to be so... Oh shit, my camera. Because I just guys tell me my camera fucking flipped out. I want it to be so extended that it's so obvious. Okay? Seven to 70. First birthday. Let it be so goddamn and here's the thing, guys. Like, I'm not trying to sound like a dick, but if I'm not talking about that first red day, it's probably not a first red day. Truly. It's not a first red day unless it's on my radar. And yes, there are times where I'm an idiot and I missed it, and that's great. But oftentimes, if it's setting up for a first red day, I'm gonna be there. All right, guys, I think I'm going to wrap it up here. Keep the video short and sweet, 45 minutes long. That way you guys will actually watch this shit, because anything longer than this, you guys tune me out. So let me know if you guys like this format. Let me know if you guys want more of this stuff. This is actually really fun for me because I like to interact with you guys on a more deeper level. And I think you guys asked some great questions. You guys asked some great questions. Know what is support, what is resistance, what is Ichimoku clouds, what color is this fucking sky and like that Nebraska, like good questions, man. Good questions. You guys are actually learning. So that makes me very happy. So that's it, guys. I'm going to wrap it up. And if you guys have any questions, hit me up in chat. I have a lot of direct messages to get through now. So thanks, everyone. Talk soon.